Hi everybody, this is Scott Holder with Aloha San Diego Properties, your personal real estate consultant for life. And today I want to branch off a little bit from real estate and talk about credit cards and some troubling, very new developments in the credit card industry. Not only are some credit cards upping their minimum payments from 2% to 4%, but more troubling, I believe, is what you may be getting in the mail in the next 30 days if you've not already gotten it, and that is a notice and change in terms in your credit card interest rate. And for example, this credit card with Capital One just went up from 5.99 to 9.99. I have another credit card that went up from just over 6% to 26%. And then I've heard two other companies, JP Morgan Chase and Citi Bank, also raising their credit card interest rates. When you call them up, it has nothing to do with your own personal credit history. They're raising rates across the board. And the problem I see with this is very similar to the subprime mortgage fiasco that happened over the last couple of years, and that is people got into these payments that they could afford, and then the payments adjusted and they could no longer afford it, and they stopped making their payments. We're in a situation now with credit cards. The same banks that got us in the subprime mortgage mess are now raising their interest rates. This, I believe, could lead to a bankruptcy crisis. And so I'm very concerned about it. In fact, I've contacted my own senator and Congress people, and I encourage you to do the same. So if you click on the link below, you can find out who your representative is in Congress and ask them to do a couple of things. Number one, you could ask for a national emergency usury rate. A usury rate is the limit, legal limit that would be allowed for all types of interest, especially on credit cards. But say a 12% national emergency usury rate is one potential solution. It could be a temporary fix. The other fix would be the Federal Reserve rolled out some measures that are supposed to take effect in July of 2010 that would prohibit the credit card companies from raising rates and that apply to all your existing balances. Beginning July 2010, when credit cards raise their rates, whatever your rate is previous on your existing balance will be the old rate will carry forward with those particular charges. My suggestion is roll back that July 2010 rule to January 1st, 2009. Otherwise, I see us in a very difficult situation with people getting credit card bills, minimum payments that they cannot afford, going bankrupt in order to get out of their credit card debt, and in the process also not making their mortgage payments and continuing a downward spiral. So you'll be hearing a lot more about this, I'm sure, in the news, but do your part and contact your congressional representatives, and hopefully they can do something in Washington to get us out of this potential future mess. Thanks for tuning into my video blog, and I'll chat with you later.